All right. Hey, everybody. It's Stephen Ho here with the Mister Sauga real estate team. And today I got Jeffrey Ho with Elite Lending. And we're going to talk a little bit about what happened when CMHC announced last week that they are restricting the lending guidelines. So thank you, Jeff, for joining us today.
Thanks, Steve. Glad to be here.
So what's going on with CMHC? What is the announcement, and how is that going to impact the marketplace?
So a lot of people are asking questions about that. CMHC, just to give you a background, they are one of three insurers in Canada, and their main role is to insure the banks in the event of a default. So if the borrower stops making payments, these insurance company will insure the bank to protect the bank. Last week, CMHC has announced that they're going to be tightening up the rules, the mortgage rules. And the reason why is because they're predicting in the next 12 months, there will be a decrease in home prices anywhere from 9 to 18% in Canada, depending on which area you're in. So the three changes that are coming up as of July 1st, that's going to affect the affordability of our homeowners is number one, they're changing the minimum credit score from 600 to 680. Number two, they are changing the debt service ratio from 39% to 35%. So that's a little bit complicated. So to give it in simple terms, for someone who makes $100,000 per year right now, as of today, they can still borrow around $481,000. Starting in July 1st with the new rule, if you're making $100,000, you can only borrow $423,000. So that's a decrease of $60,000, which is about 12% of borrowing power.
That's huge.
And it is. The third point is you can no longer borrow funds from towards your down payment. So as of today, you can still use your line of credit, you can still use your credit card towards your down payment to come up with the 5%, 10% down payment, as long as you have the income to qualify. But as of July 1st, you're not able to do that anymore.
Wow. So that's quite the restrictions on these updates. And why do you think they're trying to do something like that? Are they scared of, is it the corona pandemic that's kind of affecting everything? Or because this would only really limit new buyers entering the market, right? Or would it affect people who are in houses already?
So it will only affect new purchasers. So existing mortgages who are under CMHC rules don't apply. For those who are purchasing after July 1st. So if you get into a contract now and you submit your mortgage application and the completion date is after July 1st, you are still under the old rules. But if you're entering into a contract after July 1st, you're under the new rule. And under the CMHC rules, they only insure properties under $1 million, and for those who are putting less than 20% down. So if you're purchasing a property over $1 million, or if you have more than 20% down, this rule actually does not apply to you.
So I guess CMHC is really trying to protect people from over borrowing and ultimately protecting themselves from having to pay out these insurance claims if people actually default on their mortgages.
Yeah, so basically what they're expecting is home prices to come down. And the reason why is because of the pandemic that's happened. A lot of mortgage holders have requested a deferral in mortgage payments, and the deferral of 6 months is coming to an end in September. And CMHC is worried that people are not able to recover financially back to the pre-COVID level, and will affect repayment of these mortgages, resulting in selling these homes at a much lower price to quickly liquidate from their properties.
Yeah, it's been a challenging time for a lot of people. So I'm not sure how that's really going to affect the market after all of this is kind of said and done, with the lockdown and everything, is the economy going to rebound? Is unemployment going to remain high? Are these companies going under, or are the jobs going to come back? So it's hard to say, going forward after this, pandemic is kind of passing through. Um, do you think that CMHC is doing all of this? Like, do they actually think that that's the market's really going to be affected negatively by all of this, or are they just being cautious?
I think a little bit of both, to be honest. I think they would want to, going forward, ensure more qualified buyers rather than riskier types who are more prone to deferral in mortgage payments, or may have trouble recovering from the COVID or pandemic events that happened. And they might be doing this to also trying to cool down the market, so there's less risk for the public.
Well, the market was kind of going really well before COVID happened, but now COVID naturally just cooled down the market as a whole. So I don't know if this really makes a difference in, say, the GTA, if that's really going to, we've seen the government and other organizations try to restrict the demand, but the demand is always there in the GTA, that people want to move and live in, that they're going to have to find one way or another to find housing options. So with that being
totally
said, it's, I don't know how this is really going to affect the market as a whole. I think they're just trying to protect themselves and just be